Hey, I know a lot of you are concerned. A lot of you are anxious, and all of you are extremely curious as to what's going on with a certain stock called Palantir. The stock is down today depending on which time of day you looked at, but it is down a lot. Now, the reason that it is down, and I'm going to give it away right now in the beginning of the video. Number one, because I respect your time, and number two, because I want to educate as many people as I can before they leave off this video. So don't click nothing, don't smash nothing, don't buy nothing, just listen. What we have right now is a mixture of a few things that are causing this. They're quite common in the stock market, even though it may not feel like it. I know we haven't seen a lot of that over the past 2 years since 2023 because we have essentially been living in stock market lays for 2 years non-stop and right. Now what we have is normal market behavior as it pertains to Palantir. What we have is something that's quite normal. We have profit taking after a long spike. And on top of that, we had a short seller tweet or post something on X saying that the stock should be valued at a lot less. But whatever the case may be, everything I just said right now is either sentiment or short-term noise. If you look across the board, nothing happened with the company fundamentally that could have impacted the share price. Sometimes a company would release some sort of an update. Maybe the CEO is leaving. Maybe they lost a huge contract. Something that happens that fundamentally impacts the ability of the company to be profitable, to generate cash flow, right? Nothing happened with Palantir. What you have is profit-taking and a little bit of negative sentiment, negative noise. Now, basically, from what I gather, we have a short seller saying that because OpenAI is worth $500 billion, then Palantir should be trading at about $40 per share. Everybody basically took it as a good sign to start taking profits. Now, I'm not against taking profits at all, and I'm going to talk about that in a second. But I will say that, in 2016, actually on December 28th, 2016, about 9 years ago, we had the same short seller Citron research post on CNBC saying that Nvidia is overvalued and that it should come down in price, etc., etc. And that's a fair perspective to share. I'm not hating on Citron research, and then it's definitely within their right to post their opinion about stocks. I don't mind whatever happened in 2017. I don't know, but the one thing I know that once this tweet came out in 2016, December 28th, 2016, since that tweet to current time, Nvidia share went up 100x, almost 100x now. The stock maybe dropped or plummeted, and maybe it didn't. I don't know, I didn't check what happened on that particular day or that particular week or that particular month. But all I'm saying is that you have always negativity. You would always have, short sellers saying that this is a bad stock, bears who's saying that it's overvalued. There's always going to be some noise, right? That noise is short term. Over the long haul, if the company has very, very strong fundamentals, and no doubt Nvidia had some very strong fundamentals, right? The fundamentals beat out the noise. So if you just ignore that statement back in 2016 and just held Nvidia for the next 9 years, you have 100x your money. Not bad, right? And again, no hate to sit on research. Honestly, don't mind. I think we're all entitled to our opinions, and we shouldn't be living in an echo chamber. And also, I didn't think they said anything disrespectful. But it's within their right to think that the stock is overvalued, right? But as a long-term investor, I'm never going to base my investing decisions based on what other people think about the stock, with no offense to said other people. I'm the first to say that short-term the stock price right now may be overvalued, may be overhyped. The valuation right now is absolutely wild. I've been on record saying this multiple times. In fact, I've been saying that if you are sitting on a huge amount of profits with Palantir, now in the week ago and 2 weeks ago and 3 weeks ago for about a month, I've been saying, hey, this is a good time to trim a little bit. If you've made a lot of money in Palantir, this is a good time to trim and secure some money, just in case, as an insurance policy. And of course, the soy boys on social media were angry at me for saying that, saying, well, Tom, the stock has went up a lot since you said this. You said this back in the 90s and 100, 110, 120, because this is about a principle. The principle is if a stock is richly valued, and if there's an insane valuation and you're up a lot, it's just common sense to trim a little bit and buy some insurance. Why not? And in the case of Palantir, I've been on record in getting some. Hate that saying, hey, not a bad idea. Now, I never thought we'd be at almost $200 in 2025 with the stock price. I'm not going to pretend like I knew this is coming this year. I always say it's a $500 stock. I now think it's probably $1,000 stock, but I have nothing but patience. I think in 2025 it's a little bit premature, but eventually the stock is going to catch up to that valuation. But just like we had back in February, in February, Palantir dropped 50% and then it recovered. It's a very volatile stock. Now it's down 7%. Well, it's up 400% over the past year. It's up 1,600% over the past 5 years. No stock in the world just goes up endlessly in a parabolic spike, while stocks correct and Palantir is part of it. Isn't it drop another 7%? I don't know. Is it going to drop another 17%? I don't know. Is it going to drop another 70%? I don't know. Is it going to go up another 70%? I don't know. I'm not here to predict and time the market. Now, just as today's noise is coming out, today Palantir announced they just signed a new deal with Fujitsu for ye by million. Of course, that got drowned out in noise because who cares about fundamentals when you have drama, right? And of course, social media is flooded with all the haters of Palantir who needed the win desperately because they've had a really tough year. So now that Palantir is down finally for a day, they're celebrating all over social media, and let them. I honestly don't mind. It's actually very entertaining and spicy. I love it. I think that Wall Street is going to join the bandwagon as long as Palantir is in the red because they don't understand it and they've never understood it, and that's fine. By the time Wall Street gets Palantir, it's going to be too late, just like they did with Nvidia, right? I think that Palantir is on a very, very short list of a very few companies that are elite, that are game-changing. Not a lot of these companies out there, and I think Palantir is priced accordingly. Now, I've always ignored the share price when it was $6, when it was $60, and it would when it was $190. I never paid attention to the share price. I'm not about to start now to do exactly that. If you look at Palantir, we have a company that essentially is 10 times better than any of the alternatives in the market. It solves issues in seconds that used to take weeks. It cleans absolutely horrendous, messy enterprise data, works with multiple AI models. It is compliant with every permission, aspect you can think of every audit. It has 20 years of top-notch design that is impossible to copy, and it essentially thrives what everybody else fails, which is very, very complex. High compliance, high-stress environments. And it's perfectly suited for the AI boom we're seeing right now. Have the US commercial of Palantir? In Q2, we just saw deals go up 93%. Got boot camps converting people in weeks, sometimes in months. We got the first billion-dollar quarter in history just a couple days ago. Knowing the earnings fuller growth expected almost 50%. We're essentially looking Palantir build a monopoly, which is exactly what Peter Thiel said in 2017 they're going to do. They dominated the defense sector. Now they're dominating the commercial sector, and they cannot be caught. We have 160 deals they've closed in the Q2 earnings of $1 million. You have the NHS deal, it's like £300 million. The US Army deal, that's a $10 billion agreement. Maven is almost $1 billion. Got government growing at 50%. US commercial remaining deal value just grew 150%. You've got clients like Airbus, BP, Hyundai, AP. Just name the agnosticness of Palantir and you see it fits in every industry. Net dollar retention is 130%. We've got the best team, the best employees, the best management. The distribution system is insane. There's nothing out there like AIP. We've got conversion basically almost instantaneously. You come in as a client, as a potential client, and within a week you have a working system that you actually see how it completely transforms the way you do business. It gets stronger and stickier every year. Clients can't leave. That's why. The top 20 clients keep spending more and more and more every year. There's no switching off of Palantir AP. It is the operating system of the AI industry, just like Nvidia is with hardware. Palantir is with software, and that's why both of them will be priced at a premium. Palantir is a little bit earlier than Nvidia in the cycle, but that's fine. We have patience, right? And I think that Palantir is just getting started. Doesn't mean we can't see Palantir at $50 per share, $20 per share. I don't know, and I don't care. The only thing I care about is one thing, understanding the risks of the company. Not thinking I have a shoe in here, right? No guarantees in life except death and taxes. Palantir stock is already up over 97% here in 2025, approaching $150 a share. But where will a Palantir stock price go next year? Where will it be by the end of 2026? That's the question I'm going to answer in this video. Making my stock price target for Palantir in 2026, I'm going to share with you exactly where. I'm getting all of the numbers I'm going to use to make this price estimate, so that you can see for yourself the numbers that I'm using, and you can determine whether these numbers are accurate, too low, or maybe too high. And I'll want to hear your comments at the end of the video after you watch it on what you think about my stock price estimate, because it's always interesting to hear your thoughts on my estimates. So let's get into it. Meet at this video, let me thank my sponsor. The sponsor for this video, Fiscal.ai, where I'm getting all of the data for this video. And one of the things I really like about Fiscal.ai is their really cool charts, like the one I'm sharing with you here for Palantir. This is the return on invested capital going back to 2020, and you can see the huge increase in Palantir's return on invested capital. This is one of the reasons why investors are so excited about Palantir stock. This number has soared from a negative 130% up to 40% in the most recent trailing 12-month period. Fiscal.ai has charts like these, and segment-specific charts that you probably won't find anywhere else. There's a link in the description, and if you use my affiliate code, you'll get a discount for their services. So, back to the main point of the video, making the stock price prediction. Again, I'm getting the data from Fiscal.ai, and the number I'm getting here is Palantir's 2027 earnings per share estimate. Okay, that's this figure here at 96. This is what the analysts on Wall Street that are following Palantir stock. This is the number they think that Palantir will deliver in 2027 in earnings per share. And you can see the analysts on Wall Street are expecting big increases in Palantir's earnings per share, rising from 58 cents in 2025 to 73 cents. In 2026 and 96 cents in 2027, Palantir's earnings are rising excellently as the company's been able to keep their cost under control, while revenue growth has accelerated in recent years, as they've retained existing customers and added new customers, and especially their enterprise segment is growing very nicely, and that's a bigger opportunity in my opinion for Palantir compared to its government opportunity, because there are limited government institutions, but there's a huge amount of enterprises worldwide that could benefit from utilizing Palantir services in their everyday operations. So, the next number I'm going to need for my stock price estimate is Palantir's forward price-to-earnings ratio. Again, getting this from Fiscal.ai. Palantir's forward pay is now at a whopping 241 forward price-to-earnings ratio. That's more than 10 times as expensive as the average stock in the S&P 500 index. That's how enthusiastic investors are about Palantir stock. The valuation has soared to astronomical levels. So, now that I've gotten the numbers I need, I can go ahead and jump into my valuation estimate model or my scenario. It's analysis to determine where I believe Palantir stock price will end up by the end of next year. So the 96 cents earnings per share estimate, you saw where I got that number from Fiscal.ai, the Wall Street analysts that are following Palantir stock. That's what they believe it will deliver. And the reason why I'm using the 2027 estimate to make a price prediction for 2026 is because I'm using the forward 1-year price-to-earnings ratio. So when you're using the forward 1-year price-to-earnings ratio, you need the earnings per share estimate for 1 year ahead of when you're making the stock price prediction for. So for instance, if I was making this stock price prediction for 2027, I would need the earnings per share estimate for 2028. So that's why I'm using the 2027 estimate. And you saw the forward price to earnings at 241. If everything remains the same, meaning the company progresses to target this earnings per share number for 2026, and the forward price to earnings ratio stays at around $241, then the stock price could end 2026 at around $231 a share. However, I don't think that's the most likely scenario. I think that the company's forward price to earnings ratio will decline, and the reason because it's so high to begin with. It's already at a super premium valuation, and I will agree that the company deserves a premium valuation, and even super premium valuation to be sure. It's got all the right characteristics. It's got revenue growth accelerating. It's got operating profit margins increasing returns on invested capital, as I shared with you. Increasing, it's a strongly competitive business, meaning that it's very well ahead of its competitors. At least one step, probably two steps ahead of the competition, and so all of these characteristics are very positive for investors, and these are traits that I look for in a company, but trading at a forward price to earnings of 200. 141 I don't think can be sustainable unless the company continues not just at the current levels, but continues accelerating revenue growth, expanding their key critical financial metrics, continuing to sign new contracts with large total contract values, and I just don't see this kind of momentum continuing for very much longer. Maybe for a few more quarters talent here can sustain. But already, the management team was talking about how they need to hire a lot more people and invest a lot more in the business in order to support this growth. So they can no longer support the growth with existing assets the company's operating with. They need more people. They need more resources to support these new customers, to support these new customer acquisitions, and to support these new expansions. So, for those reasons, I'm expecting a decline in the forward pay multiple. Now, if the forward pay multiple were to decline to 200, then the stock price would still rise, but a little less so to $192 a share. If the forward pay multiple were to decline to 150, the stock price would fall to $144 a share. If the forward pay multiple were to decline to 100, the stock price could fall to $96 a share. Now, keep in mind the forward pay multiple of 100 would still be roughly 5 times the average stock in the S&P 500 index. So that would still be a super premium valuation, and that would cause a decline in Palantir stock price by roughly 50%. I just want to point this out to you, just so you get an understanding of how expensive Palantir stock is right now in terms of valuation, in terms of what you're getting in return for the price that you're paying. And we're measuring that by the earnings you're getting as a result of the price you're paying. So all that being said, where do I think the stock price ends? Where do I think is the most likely scenario for Palantir stock price by the end of 2026? I think the stock price increases, but not by all that much. My estimate is that the share price will be between $150 and $180 per share by the end of next year. But you're going to experience very large risk. You're going to experience lots of volatility in order to get this level of return from Palantir stock. So I'm curious to hear your thoughts. What do you think of this stock price prediction for Palantir stock? By the way, I have for my channel members at the investor tier or above, you get access to all of my price targets that I have for the companies that I'm following. You also get over 200 buy, hold, or sell recommendations on all of these companies that I'm following. You get access to that with an investor tier membership or above. In addition, you also get my proprietary discounted cash flow valuation models, like the one I'm sharing with you here for Open Door Technologies. And I have a list of over 200 companies where I've created a discounted cash flow valuation, which you will get access to in conjunction with that investor tier membership or above. So, great value for channel members that want access to my spreadsheets that I work with, creating stock price targets, discounted cash flow valuations, and buy, hold, or sell recommendations. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you. Now, it goes through my framework for evaluating stocks. Some of you often ask why I like this stock, or why I like the other stock. And this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description. I'm curious as to what's going on.